second. Just need to get everything else up and running. Come on, Telegram. There we go. Okay, it should be live on everything now. Good morning, Europe. I hope you're well. The markets are seeing somewhat of a dive. This morning we have got a market that is closed in America today. The markets are open in America up until the regular trading hour kicks in and then the market closes. So the markets will open in approximately 10 seconds. And it looks like it's a negative one. I have some slides with you. I want to go through Expresso, amongst other things today. See if I can highlight Expresso to you in real time. Although I may have to go through the material first. So yesterday's close in the DAX was 23.29 and we're currently trading about 50 points lower. That drop has actually happened in the last hour. The software you're seeing me use is self-developed. It's free of charge. You're welcome to use it. If you are in my Telegram channel, you'll know how to get hold of it. The DAX price level that I sort of have in mind for this move would be 210. I think that's the... Where did I get 210 from? Let me just go out a little bit further. Maybe that was too far. So I think traditional technical analysts would probably say, ooh, that's a shoulder. And that's a head. And that's another shoulder. And if we break this neckline here, then common wisdom is that the length of the move from the shoulder up to the head, which is here to here, is the same amount that you're going to have on the downside. So I think that's what would probably be called a measured move. Where exactly that would take us down, I don't know. I suppose I could quickly find out if I just did a little bit of technical analysis wizardry. So it'll be something like this is the left shoulder, this is the head, and this is the right shoulder. And then sort of, I'm just going to sort of draw a rough sketch here. And this is the move up. And then if I copy that to the break, that would take us down to, what would that be? 20,000 and change. So down to this area here. So that's sort of the pattern. But please, that is just me. It's not exactly a Picasso we got going here. This is pretty rough, but it sometimes is when you're doing this live. Do you not agree? Doesn't always appear so pretty. So there you go. I'll leave that for a sec. There you go. Maybe we could put a little bit of a smiley face on, something like this. It's like, oh, I'm probably being childish right now, but you know. Anyway, ignore me. Whoop! I didn't mean to do that. This one? There we go. Excuse me. So let's so the Expresso would basically state that you take the high and the low of the last 10 minutes before the market opens. In this case here, the high and the low is 2265 to 283. That's a relatively common range of about 25 points in the last 10 minutes. And then you subtract about 15 or add 15. So that would be a short at 250 and a long at 298. So there you go. So Expresso would probably trigger a short just about here. I think the problem I have with this strategy is that we are right down at support. Although I did, during my morning preparation, I think I had 210 marked. Please stand by because you got a first bar negative in the FTSE, so I'm buying the FTSE here. I really must get used to not talking just as the market is about to give me a signal. That's a pretty shitty feel. My fill should have been at 2, below 8246. So as I said, I will be going through some slides with you. We'll be reviewing. I'll show you what I want to talk to you about today. So we'll be reviewing the 7th and the 8th. So I'll be showing the school run, etc. But I'll do that a little bit later on. So if you're wondering why am I buying here, that's because this first bar here is negative, so it's called first bar negative. It's a new pattern we invented. It's not head and shoulders. It's the head and smiling shoulders. I appreciate you asking questions, but I try to not answer questions while I'm trading. It's too distracting. I saw someone just saying, when would you when would you move stop loss up? And I would say I'd probably move stop loss in the FTSE if it got up to 53. The alternative that you do moving stop loss is you wait for a 10-minute bar to close and then you place the stop loss below the low of that 10-minute bar. So I wonder technically if you could already move the stop loss up now. So this software that I have makes moving stop loss and placing orders very efficient. So I'll move the stop loss up to 39. Some of you good people have pointed out that traditional websites, including the New York Stock Exchange and the Nasdaq, hasn't got any mention of this this extraordinary holiday in the U.S. markets. And that's true. I haven't been able to find it either on traditional outlets, but it is nevertheless. I couldn't even find it mentioning it on CNBC. Interestingly. So I'm currently about 6 points in profit in the FTSE. So I'll move stop loss to break even. Might as well. So see, in the old days I moved like this on my bigger account. That would be worth £3,000. Let's see if we can add to this trade. So the screen setup that I have is I got this monitor here where you're observing my trades, and but I also have other monitors, so I don't have to flip between the FTSE and the DAX. That's just for your benefit. So stop loss is at break even now. I actually forgot to see where the FTSE closed. So the FTSE kind of closed the gap, and then here we go. I'm going to take my profit here. close the FTSE. So in these initial stages of building up an account, it's about trying to avoid taking too much risk until you actually got some capital behind you, and I can start trading bigger. So as you can see, I'm up 3-4%. I actually had a trade last night. I tried to position myself short in the Dow. I was a little bit too early, and I ended up losing. I did it in really small size. I did it like in 25% stake size, and it was quite late in the trading day, so I thought I'm not going to post this to Telegram because it's probably not going to make any difference. And the irony is that it was actually plus 100 points, and stupidly I didn't move my stop loss, and then it moved minus 100 points, and I thought, oh, bollocks, and I just took my loss. So I always keep a really close eye on the slightly higher time frames, and if I was just trading for myself, and I just want to point this out to you because I think this is something that you as a trader need to be mindful of, is how frequently it is that you can get decent scalp trades out of selling above prior bar high. Telegram keeps asking me to update Telegram. I think I might just... Someone is saying, I have a really hard time understanding how you decide to take profit or let it run. Well, I'll try to read the market. And sometimes I'm in the mood for running the profits, and other times I'm in the mood for taking the profits and build up my account. Right now I'm sort of in the, I want to build up the account. It's fundamentally not the right mind frame to frame of mind to have. You should really just say, okay, I should always try and run the positions. But of course, we attempt to read the market, and maybe we have a sway, maybe we are bullish, maybe we are bearish. One thing I can tell you is with the FTSE, and perhaps I can show you if I delete this, and I take you on a 5-minute chart. So you're looking. So what you're seeing here in the FTSE is you see a very clear push lower, and then now you're backtracking, and you will see that the lows of this bar here and the low of this bar here, there's very little overlap, and that's quite important because the FTSE does have a tendency to always backtrack. Now, if I take you back to yesterday, let me just get rid of this. So here's the FTSE yesterday, and ignore that this is before the market actually opens. Actually, you can just take this here. So here the market pushes higher, and you have very clear bullish bars with no overlap. And what I mean by overlap is that, well, maybe by doing as a different example is that you have a market that pushes higher, and then the market overlaps and goes all the way back down again. Well, the FTSE is one of those indices that has a tendency to never offer you real true overlap. Of course, it does happen like over here. If there was no overlap, it would retrace all the way back to up here. But look at this price level here and see where we are right now. And so here we're pushing higher and then overlap. And here we're pushing higher. I could go to a previous day. And so you take a look at, for example, the FTSE, the previous day's morning, so not yesterday, but the day before. You have a big push lower, and then whatever overlaps that it didn't achieve, it certainly achieved later. And then even so, it retraces. So there's frequently an opportunity in the FTSE to get in if you're not in early. And of course, my premise for buying is basically just a well-researched pattern called first bar negative. So yesterday you had a first bar positive. I'll go through that with you. So here in the DAX, you have a high, an Expresso high of 283. That would warrant a long position in the DAX at 298. And so here we are at 303. So there's plenty of time if you wanted to do that. I'm waiting for school run, but certainly would be an opportunity to be a buyer here in the DAX. Going over to the FTSE, I would be tempted to be a buyer below this low here because the price action is generally bullish. What my concern today is how deeply affected the European indices are by the fact that the US markets are closed. I don't know. I could have taken a partial profit if I wanted to, but I decided just to cash in. Someone has said here, Gary says that the guy called ICT, he has named that free bar pattern where there's no overlap as a fair value gap. It's just, in Denmark we have this expression that a dear child has many names. So I wouldn't be, and I say this with the greatest of respect of any educator, but perhaps I wouldn't be so enamored by the name. It's easy to give a setup a name, but the names themselves is just what we call whatever it is. It's shall we say, it's the principle behind it. And indices are different in nature. The FTSE is a different beast to trade than, say, the DAX. So the DAX has set up a what's called an aggressive school run. I'm going to wait for the school run rather than the aggressive school run. I'm not going to be overly aggressive today. There's a time and place, isn't there? Someone is asking me, how do you prepare for the day? So I start off with very, very strenuous physical exercise, cardio, weights, and we're talking about fucking proper weights, not pussy ass around weight in the gym, but take 2 25-kilo bars, one in each hand, and you walk up and down your lawn like proper farmers carry. That's why at times I'm a little tired by the time I get to you, because by the time that we talk here, my day usually starts at 5 o'clock a.m., 5 a.m. And it sort of depends on where in the world I am, and sometimes it starts as early as 4:40. Does also mean that I go to bed early. What I look at, I don't spend an overt amount of time looking at the markets as a preparation. I might know what was yesterday's high or yesterday's low, but I don't. What I do spend time on is what I will go through with you today. I think it's a little early, but so I go through. So how did the DAX trade yesterday? So this is from the 7th, but you saw a beautiful school run here. You saw a 2-bar lower, and then a beautiful long. We would trade it together. I didn't take this here. And there's a few things I want to go through with you today, and I'll get to that later. And then there's yesterday's school run, very big push up off the lows, and school run sets up, brunch break set up. It's not that I don't want to take these setups with you, but it's oftentimes that would mean I would have to be here for almost 2 hours streaming, and that can be a little taxing on the mental faculties to be here for that long. So did you see what happened here in the FTSE on a 5-minute chart? How do you see how we went below prior bar low? Of course, this whole overlap concept has to be obviously taken with a pinch of salt. Pinch of salt in that, well, so is this an overlap of this? And then should we then overlap this bit here? Does that need to be overlapped? And of course, I don't have a crystal ball any more than you have, so we trade to the best of our ability. So Nils is asking me, what are your game plan for building capital in a small account? The same as I always do, is you trade somewhat conservatively and trying to build up the account balance so you can start trading bigger size. Because trading £10 a point is unlikely to earn me a truckload of money. But if I could build the account up gradually, and I could increase this to £20 a point. And I don't want to sound like the woman and the eggs. Do you know the story with the woman and the egg? She walks to the market, and and she's carrying her eggs, and if she can sell these eggs, and then she can buy another chicken, and then that will lay more eggs, and that's the story of the chicken and the egg. So what I'm attempting to do in this experiment is an unusual experience maybe, because I haven't traded this size for 20 odd years. But I think that it is a worthwhile experiment, if nothing else, than to show people who have a smaller trading budget than I have, or many other professional traders have, is that it is possible. And that's the whole point of it. Yes, it is absolutely possible. But the very same principles that I use on a big account are the same principles I would use on a small account. But with the difference is that, considering I am trading live, I would probably just be a little less aggressive, and perhaps a little bit more trying to just keep the money trickling in rather than going for a big kill. So it's absolutely worthwhile watching prior bar lows in this case an uptrend. Why do I say there's an uptrend? Well, you look at the daily chart and there's no doubt that this is an uptrend. some analysts would get overly infatuated by this being a downtrend, but I can't help but think, okay, but you also have a very clear identifiable double bottom. So surely this must be an uptrend. But some people say, oh no, this is just a retracement. Well, I guess that's where trading comes in, isn't it? Some people see this as a shorting opportunity, whilst others seeing this as a fresh opportunity to get long. I was every now and then I get contacted by analysts. In this case, I got contacted by someone from a very esteemed bank in the world, and it was their Elliott wave analyst. And we're talking very high up, and I happened to know him, and we were discussing my 72-week call, and he said, yeah, I really like your 72-week call, but I know I see this as a wave 5 of A of C. And I said, look, amigo, you lost me here. I don't work like that. I don't sit and count waves. And if you can make that work, great. I personally can't make Elliott wave analysis work. And so I'm just short. Well, he expected a retracement. Then 2,000 points later, the Dow had kind of humbled him. And I suppose the moral of the story is that sometimes we can get really overly carried away what we think the market should do or shouldn't do, as opposed to just trading what is. So I looked good when I took profit in the FTSE because it went low, and now when I took profit and it's 10 points higher, now I don't look so good. But there's no space for regret. It's like they say in the James Bond movie, it's sort of unprofessional because, you made a decision, you took your profit, end of story. So stand by in the DAX for a long position. What's interesting here is that I've done some research on the school run, and with a sensible stop loss, you can also make school run work in opposite, which means that you'll be selling short here. Don't know if you're interested in trying that, but that would mean selling short the DAX here with about a 20-point stop loss. FTSE is thundering higher. Complete overlap filled. Fair play. I think I just lost Telegram. There you go. I decided to update So Livio is asking me, why are you only executing SRS? Why don't you trade ASIS? Well, you can't trade both of them. And ASIS is designed for really strongly trending markets. They don't work so well in overlap. Stand by for a short position in the FTSE on a double top. Oh, wrong place. Sorry about that. Livio, ignore that. It has to be placed here. I'm closing the FTSE. It was a scalp. That was just a scalp double top. It's what I call the first prick, or first. What did I get out of? Nope. There's the two losses I had in the Nasdaq and the Dow yesterday. Made that back this morning. That was 2.4. Sorry. I want to just look at the FTSE on an hourly. The DAX is more sticky this morning. Maybe I'll hold off trading the school run. You know what we could do? We could have a look at the DAX. Sorry, the Dow. Because the Dow follows the European markets in the futures. And if I show you something here, promise me you will research it yourself. But I worked around the European Open and bracket the first 15 minutes, or the last 15 minutes before in the Dow. So I'll show you. Say yesterday. So it's this one here, long above. In case you can't see it, it's this bar. It's this bar here. And here. And I'll show you it didn't work here very well. There's the 8 a.m. 8:15. Let's try the previous day. It's probably not the best of idea to use examples from early January on account. The market not being overly heavily traded. But if I picked a random time, just go back a bit in time. So let's go to November. So So let's try November. So here's the Dow. European Open. That's not a good example. Didn't really work. This bar here, long above, short below. You would get triggered short here. Let's try the deck the day after. Maybe I'll prepare some better slides than this. There's the Open in Europe. Long above. You don't get triggered short, although you do later. Anyway. Maybe traders are getting their orders in before the market closes in 6 hours. So someone called Manikandan Dhananpalal, clearly Indian, is saying, "Hi Tom, I'm watching live stream from US. When are you planning Nifty 50 India?" Well, here's the thing, my friend. There are no CFD brokers in the world that offers the Indian index. If you can find them, please write to me. I'd be very interested. What I'm looking for is the ability to trade the Nifty 50 on a CFD, and that is not generally available anymore. There's a good chance I'll just keep this as a short session, but I would like to take you through. You can review. You can take the school run. I'd like to just review the last few days. I think that's worthwhile. So looking at the DAX on the 7th of January, that was a beautiful long setup on the school run, the second 50-minute bar. And there's a little bit more to this chart. Then you have the brunch break, which is this bar here, which is the 7th 50-minute bar. 1, 2, 3, 4, 5, 6, 7, short below. It set up a decent trade. And if you wanted to flip the switch, it set up a long trade here. But, and of course the school run is the second 50-minute bar, long above 177, short below 148. And if you were gonna use that in today's market, it would mean that you would be long above the DAX here at 313. So long above, plus a little bit of offset. I'm quite keen to perhaps just teach you this and then retrieve for the day. Because if it is a US holiday, I'm always careful about trading too much when there's a US holiday. It does things to the market. Hasn't done it this morning, I'll admit that. But what I want to show you on a 15-minute chart, because I think it's a very good it's a good tool to have. I want you to be mindful of how frequently do you see the market close below prior bar low. Well, you see it here. And the flip side, well, that triggered the school run. You see it here. And the flip side triggered along here. You see it here. And the flip side triggered along. you don't close below it. And here, if you actually did short, you would have that as you could have a 1 bar stop loss, which means you would be stopped out here if you got stopped out. So I'm not saying that you can't short here. Sorry, I'm not saying you couldn't short here, although this is the brunch break, so you would already be short from here. But I'm not saying that you couldn't sell short right here on sell short on close. But you wouldn't have to have a stop loss all the way up here. You could have a stop loss just above. And if you sell short here, and nothing wrong with that, but you don't need the stop loss all the way up here. You can just have what I call a 1 bar stop. What I want to show you is this next slide, because I think that's interesting. So this PBL stands for prior bar low. And it's tend to be if the market doesn't close above it or below it, and it tends to be a good place to get in on an uptrend if it goes below prior bar low. But what I'm going to show you is this. What you're seeing here is the same chart as the previous, but here the focus is just on the close below prior bar low. And you really have to look very careful here, but I've magnified the image a little bit here. But if I took a normal retracement level from this bar high to this bar low, how much does the next bar encroach on the previous bar before it begins to slide lower? And the answer is 38%. And this is something I have come across in my research repeatedly. And I want to point that out to you, not because I feel like that we need to reinvent Fibonacci, because I don't want to do that by any stretch of the imagination. But if you do have a close below prior bar low, as opposed to just trading below prior bar low, if you actually close below the bar, you can have a stop loss up here, but you could consider actually just saying, okay, if it goes back into the range of the previous bar, I could sell short here at the 38% level, basis on just the retracement of that bar alone, that bar high and that bar low, this line here and this line here. If you can manage to do that in real time. If you look at the DAX on the 8th, then you have an early morning low, which is a double bottom from the overnight range. And then you have a school run setup. And then you have a brunch break here, triggers long here. And then you have a very strong reversal. I didn't trade this, I wasn't here. But this bar closes below the prior bar low. And notice how none of the previous bars closes below prior bar low. This bar here goes below but doesn't close. And then the rest of the day is just one big old mess. Now let's look at the DAX 10-minute chart, because I would like to speak to you about the Expresso. The Expresso is an attempt to capture the market breaking higher or lower right out of the gates when the market opens at 9 a.m. European time. The bar you see highlighted is the 10-minute bar before, that's this one here. It has a high of 2184 and a low of 2174. The idea is to have orders ready to buy or sell short above or below these levels defined by the last 10 minutes before the market opens. The exact number above or below is still being researched, but I'm currently working on the idea of using 6 points in the FTSE and 15 points in the DAX. A good friend of mine, a trader colleague called Andy, we refer to him as Karaoke Andy, and I have been sort of discussing what number should we use as the trigger. But if the high is 2184 and we add 15 to that, that gives us 2199. The market does go 212, so you can see there's not a hell of a lot of points to play for on this particular day. But if you look at the previous day, the next day, then you have an Expresso 2304 high versus 2284 low. And here the Expresso would really have captured that explosion out of the gates in the morning. Now, don't be confused that my chart says 8 a.m. That's just because my computer is forever set on UK time, because I spent most of my career trading professionally in the UK. So even though I don't live there anymore, my computer is forever just set on this because I'm so used to it. And again, notice how the 10-minute chart tends to much more frequently get or close below the prior bar low, as opposed to, if I show you the previous chart, notice how the 10-minute chart closes significantly more frequently below prior bar low. It did it here, it did it here, and it did it here. So on a 10-minute chart, as opposed to a 15-minute chart, a close below a prior bar low in an uptrend is actually a buying invitation. But if it was on a 15-minute chart, it could very well be seen as a sell short. Okay. And then let's look at the FTSE. So the FTSE is, this is a first bar positive. So this is the opposite of the first bar negative that we traded this morning. The first bar positive is actually a signal to sell short if we trade below it. But that didn't come until much later, which you may or may not have been at your desks. Okay, I think that's it for the morning lesson. Let's go back and look at the market. So the DAX is trading back into the range. I'm not going to say I told you so, because that would be pompous and completely without merit, because I have no idea what's going to happen any more than anyone else. But I am nervous about trading a market on a US holiday. That's just, from experience, it can be tricky. And well, this morning has proven to be. Doesn't mean it will continue like this. So if you had bought the DAX on a school run breakout, the best you would have been in profit was 9 points, and right now you'd be 20 points offside. Would I like to take a short position? Yeah, I would like that. But again, while I may do so, I am concerned about trading when we have a holiday in the US. If you want to take a look at the, I don't know if you noticed this, but if I just go back to my DAX pre-prepared charts, did you see what I wrote here? We had a complete retracement of the big move lower from early December. Complete retracement. So I'll show you this. So here's the daily chart. We went all the way back up. A complete retracement. That's looking at the weekly chart. If that's the best the bears can do, when look out above. The Dow Jones index is somewhat different. Here's the weekly chart. It really did hammer lower, but seems to be building a base right now. Okay, sure was a bad idea to close that FTSE. There you go. So I'm all happy with my 15, 14, 13 points, when in reality there was another 30 points in it. That is the cruelty of trading, isn't it? Okay, so I think I might just hold it here. I hope that was somewhat useful for you on this shortened trading day in honor of former President Jimmy Carter, president from 1977 to 1981. I seem to recall, and was one of those called one-term presidents. People are pointing out that he was an underrated president. He did a whole lot of work behind the scenes that next president Jimmy Carter took credit. President Ronald Reagan took credit for. I'm not overly invested in American politics. Anyway, in a completely unrelated trivia, do you remember an MTV music video called Funky Cold Medina? Sort of had quite an interesting riff. dude, dude. Anyway, so I happened to be sitting watching a rerun of Brooklyn Nine-Nine, and there's this episode where Peralta and Captain Holt, they are trying to infiltrate the FBI, and one of Captain Holt's old colleagues, Bob Anderson with 3 N's, he's talking about that the mob boss Jimmy Figgis is gonna eventually get them, and they trick Bob Anderson. And Captain Holt says, when you've worked with Detective Peralta for 3 years, you know what a funky cold Medina is. Anyway, so I thought, I haven't seen that funky cold Medina for a long, long time. So I looked up the funky cold Medina, and the guy singing the funky cold Medina, I thought, that's interesting. I have heard that voice before, that song. And I thought, I remember where I've heard this. Like how Steve Jobs is talking about connecting the dots. Well, my mind connected the dots. I've heard that voice before. And it turned out that the guy who sings Funky Cold Medina, he's one of the crooks in the Michael Mann movie called Heat with Al Pacino and Robert De Niro. He's in the early movie. They are one of the informants, and one of the informants is actually the singer singing "Funky Cold Medina." So there you go. How's that for a little bit of trivia? All right, ladies and gentlemen, I think I'll stop embarrassing myself and showing my age by referencing MTV videos from 40 years ago, and I'll wish you a very pleasant a very pleasant. Oh my God! Look at the account balance, 99.99. Couldn't we just have gotten a tick more so we could have been up 4%? Anyway, that's me done. I will see you tomorrow for a much more extended trading session in the morning and the afternoon, but as far as I'm concerned, job done here, and I'll call it. I hope you have a pleasant rest of your day. Look after yourself, stay strong, and I will see you tomorrow. All the very best. Stay strong. Bye for now.